Hi guys, this is Imanshi Roda from American Academy of Financial Management, and today I've come up with a very interesting question. We have been answering a few questions received by many participants, and the question that I am going to address today is I've received a very interesting question that what are the different type of policies that are required to run a country. So there are many kind of policies which are made by, some of them are made by the governments and some of them are made by the central banks. So broadly, there are two different type of policies which actually run the economy, as in the policies that drive the finance, the economy in a country. And broadly, this is true for almost all the economies, because some of the economies or some of the countries do not have their own central banks. So not all the countries follow similar kind of policy, but I can safely say that 90% countries or 95% countries, they are run broadly by two different type of policies. One are the policies which are made by the federal government, or what we call as central government, and other policies are the ones which are made by the central banks. So broadly, there are two kind of policies: one which were run or which are made by the central governments, and the other which is made by the central bank. The policy which is made by the central government or the federal government is called the fiscal policy. And fiscal policy is the one that drives or that looks after the expenditure and the income of the government. And the other kind of policy which is it is made by the central bank, and the central bank's policy is named as the monetary policy. So broadly, there are two kind of policy. One is a fiscal policy which is managed by the federal government or the central government, and the other which is monetary policy which is made by the central bank. And both of them are broadly responsible for the development and for the growth of the economy. Now, federal government's policy, which is a fiscal policy, it takes care of expenditure and revenue of the government, and this is how they run the country. And the central bank's policy, which is the monetary policy, it primarily takes care of the monetary side of it, as in how much is the money supply or how much should be the money supply in the economy. Like for example, let's talk about India's central bank, which is Reserve Bank of India. So India makes its monetary policy once in 2 months. It's called a bi-monthly monetary policy. In a similar fashion, if we talk about US monetary policy, the central bank of the US is US Federal Reserve. So the US Federal Reserve makes its monetary policy every 45 days. So they make a monetary policy 8 times a year, while we make a monetary policy 6 times in a year. And this monetary policy is what drives the money supply in the economy. So whenever you look at the infrastructure side, as in if the infrastructure is increasing, or during the budget the capital expenditure is increasing, or the government is borrowing more funds, it is more focused towards the fiscal side of it. So this would become part of the fiscal policy. While anything pertaining to money supply, for example inflation, interest rates in the economy, that pertains to monetary side of it. Both these policies can be expansionary or contractionary in nature. So anything that increases the expenditure on the fiscal side is referred to as expansionary monetary policy, expansionary fiscal policy. Like for example, the government says during its annual budget statement, the government says that I am going to spend more money in this year on the development of schools and infrastructure in the economy. That is expansionary fiscal policy. And the government says, and when the government says that I'm going to do less of capital expenditure, it is a contractionary fiscal policy. In the same way, whenever the government feels that, for example, whenever the central bank says that we are going to increase the money supply in the economy, as in by reducing the interest rates, or maybe by printing more money, or by buying the bonds of the financial institutions, then they are increasing the money supply. It is called the expansionary monetary policy. So anything that increases the money supply from the central bank is expansionary monetary policy. From the federal side, from the fiscal side, is expansionary fiscal policy. In the same way, whenever they reduce the money supply, whenever the government spend less, it is a contractionary fiscal policy. Whenever the central banks pulls out money from the economy, is called it becomes the contractionary monetary policy. So broadly, there are two kind of policies. Let's recap. So there are two kind of policies. One which is made by the central government, fiscal policy. Fiscal policy can be expansionary or contractionary. Whenever the government spends more, it is expansionary. Whenever the government spends less, it is contractionary fiscal policy. Whenever the central bank, so there are two kind of policies made by the central bank also. It can be expansionary or contractionary monetary policy. Whenever they increase the money supply, it is the expansionary monetary policy, and whenever they decrease the money supply, it is the contractionary monetary policy. I hope the concept is clear to everyone. So we have answered a very important question today. What are the various type of policies made by or required to run a country? So broadly, these are federal government's policies and the central bank's policy. One is called the fiscal policy and other is called the monetary policy. Not all the, as I mentioned at the beginning of the question here, that not all the central banks, not all the countries have their own central banks. So not all the countries make fiscal monetary policy, but all the countries, almost all the countries, they make the fiscal policy for sure, because all of them have their own government, whether it is one form of the government or another form of the government, but they have the governments. So broadly, there are two kind of policies, fiscal as well as monetary, which drives the economy of most of the world. Thank you so much.